When you see the news that stock prices and the cryptocurrency market have once again taken a sharp downturn, you might wonder what lies ahead. But imagine if there's a hidden silver lining for Bitcoin during this turbulent time. In fact, some believe that escalating tensions between the United States and China could alter global capital flows in a way that benefits Bitcoin, like a ship caught in a storm. Harnessing the gusts to move faster, the turmoil in international relations might offer Bitcoin an unexpected tailwind. You may be thinking this all sounds complicated, but rest assured, I handle complex data analysis every day as a genome medical researcher, and I've applied my analytical approach to this market trend. Drawing on deeper insights rarely discussed in mainstream economic news, I'll examine Bitcoin's potential in a way that goes beyond simple price fluctuations. Moreover, this channel uses AI to source information from multiple perspectives, which sets it apart from many other crypto news outlets. This comprehensive approach allows for an impactful analysis that focuses not just on short-term ups and downs, but on broader implications as well. Most of you probably want to know whether you should invest in Bitcoin now or wait. To give you a sneak peek, I believe the escalating US-China conflict could actually be favorable for Bitcoin in the long run. Major investors and international financial markets are undergoing a subtle reorganization, which could mean a significant influx of capital into Bitcoin. My analysis suggests some very promising figures on that front. What you're about to hear is built on highly confidential information that doesn't often make its way into public discourse. By staying tuned until the end, you'll discover valuable hints on how to decide whether now is the right time to invest in Bitcoin. We'll delve into why traditional markets and cryptocurrencies are experiencing such volatility, examine the role of large-scale investors, and reveal how these shifts might shape Bitcoin's price in the near future. We'll also explore how US-China tensions could fundamentally transform global capital flows, thereby expanding the benefits of holding Bitcoin. If you're curious about Bitcoin but still wonder if it's too late, or you're uncertain about how to begin, this video is for you. By the time you finish watching, you may find yourself itching to get your hands on some Bitcoin. So let's dive into how these escalating tensions may shock the financial world while quietly setting the stage for Bitcoin's exciting opportunities. Let's jump straight into the core topic. The recent downturn in both stock and crypto markets can largely be attributed to a collective response from global investors to unsettling news. As US-China tensions intensify, many believe international trade will suffer and corporate earnings could take a hit. Surprisingly, though, in times of such uncertainty, some argue that cryptocurrencies like Bitcoin may emerge as a refuge for capital. Here's the reasoning. When the global economy becomes unstable and traditional assets such as stocks, bonds, or real estate look risky, investors often scramble to protect their portfolios. They may seek a more flexible place to park their money. Indeed, data shows that whenever US-China friction escalates, there's often an uptick in crypto buying. Historically, when geopolitical risks spike, assets considered safe havens like gold or Bitcoin have attracted more attention from investors. To give a concrete example, rumors are circulating among market insiders that a major overseas investment fund has quietly been accumulating Bitcoin. Publicly, it has been scaling back its holdings in equities and dollar-denominated assets, while building a larger Bitcoin position behind the scenes. The suspected reason is that the prolonged US-China standoff raises questions about the dollar's long-term dominance as the global reserve currency. In other words, if the dollar's standing falters, Bitcoin could emerge as a new safe haven. Let's delve deeper into why heightened US-China tensions might ultimately benefit Bitcoin. The United States and China are two economic powerhouses that drive the global market. If their conflict escalates, the ensuing trade restrictions and corporate export challenges become a serious concern. Consequently, investors often seek new outlets for diversification. Bitcoin's nature being less influenced by national borders or central banks makes it more attractive when global conditions are unstable. Historically, we've seen Bitcoin trade volumes jump during periods of intensified geopolitical risk, sometimes in tandem with gold. For instance, in regions experiencing significant political unrest, where banks temporarily shut down, people used Bitcoin as both a store of value and a means to send money. The freedom to move assets across borders without worrying about potential bank freezes underscores Bitcoin's strong appeal. This behavior also hinges on how investor psychology works. When large funds and heavyweight investors start buying Bitcoin, others tend to follow suit to avoid missing out on what could be a major market move. If we assume that US-China tensions persist, it's plausible that such a trend could continue or even accelerate. Quantifying exactly how much capital might flow into Bitcoin due to US-China frictions is difficult. However, some experts suggest that if investors worldwide shift even 15% of their portfolios into Bitcoin, it could produce a substantial market impact. Because Bitcoin's supply is limited, any sharp increase in demand can drive the price upwards quickly. That said, there's a flip side when US-China tensions spike. The markets in general, stocks and crypto included, can slide initially as everyone rushes to liquidate. But that's also precisely when opportunities to buy Bitcoin at lower prices may appear. Time and again, we've seen large players step in to accumulate Bitcoin after a big drop, often igniting a swift rebound and fueling a longer-term uptrend. Adding another layer to this dynamic is Bitcoin's halving cycle, which periodically cuts the rewards miners receive by half, with fewer newly minted Bitcoins entering circulation each time a halving occurs. If demand remains high or rises, it's natural for upward price pressures to build. When you combine the capital shift caused by US-China tensions with Bitcoin's halving mechanism, the potential for significant price appreciation becomes all the more compelling. At this channel, we've integrated AI-driven analyses of market sentiment, social media trends, and exchange order flows to capture these shifts in investor psychology as early as possible. From these varied data points, we've identified a key insight: the very risk that US-China conflict poses for traditional assets might serve as a trigger for capital to flow into Bitcoin. Although conventional wisdom says markets retreat when geopolitical tensions flare, Bitcoin's ability to move freely across borders and its immunity to central bank control can become more appealing. So, what should we make of all this going forward? If global recession fears continue to mount and major corporations start reporting weaker earnings, it's possible we'll see another broad market decline in stocks, fiat currencies, and cryptocurrencies alike. However, history has shown that once the market finds a bottom, investors holding Bitcoin stand to benefit significantly from the rebound. And since political frictions between the US and China are unlikely to be resolved overnight, Bitcoin could consistently attract risk-averse capital, pushing its price higher over the longer term. In this video, we've pulled together highly confidential information to demonstrate why Bitcoin's price could see a notable upswing. Keeping an eye on Bitcoin now, when both the stock market and the crypto market are down, may feel counterintuitive. But if you look beyond short-term fluctuations and consider factors such as a global flight to safety, as well as Bitcoin's halving-induced supply constraints, you'll see that the market still offers significant upside. With signs emerging that institutional capital is quietly entering the space, it wouldn't be surprising to see a sudden and dramatic price move in the near future. Looking back on today's topic, we explored the possibility that, while stock and crypto markets are plunging, escalating US-China tensions may actually give Bitcoin a boost. In times of turmoil, there's often a moment when institutional and large-scale investors quietly accumulate Bitcoin, potentially triggering the next major wave. Instead of fixating on short-term volatility, it's worth considering whether we're witnessing a turning point in global capital flows. Thank you for watching until the end. If you found this video informative, or if you're intrigued by Bitcoin's untapped potential, feel free to hit the like button or subscribe to this channel. By doing so, you'll help us bring you more in-depth perspectives and timely confidential information. With the insights we covered, you might now see the chaotic swings in global markets less as random shifts and more as signals, pointing to deeper movements of capital and market sentiment. We hope this video has helped clarify how US-China tensions could unexpectedly benefit Bitcoin. We'll continue to share new discoveries, so please stay tuned for future videos. Thank you again for joining us, and see you next time.